Hostplus spend $30 million a year on advertising. And I said, look, just try our platform. As a technologist, you're always running A/B tests. Run an A/B test. I'll give you $1 million worth of free advertising on our platform. I'm 100% sure it'll work. It'll be better for your members because it's a lower cost of advertising, which means you're spending less money on marketing, which means more money goes back to members. But then that challenge publicly, which I did on LinkedIn, was met with a letter from Hostplus to Airtree, who they had invested through into us. They got like a sub 1% equity holding. But they didn't just say ignore the challenge. They actually asked Airtree to fire me because I challenged them. And then that just made me say, well, that is really overstepping the mark.
Hi everyone, I'm your host Rohit Bhargava, and you are listening to episode 179 of the Startup Playbook podcast, a weekly series where I sit down with successful tech founders, investors, and operators to unpack their journey, lessons, and insights to help current and future entrepreneurs. The voice that you heard a little bit earlier was that of Ben Thompson, the co-founder and CEO of Employment Hero, and our guest for this episode. Employment Hero is one of Australia's great startup success stories. It launched in November 2014, and fast forward almost a decade later, they now have over 2.5 million users and over 300,000 SME customers globally. In 2023, they raised a $263 million Series F funding round, taking their total funding to $650 million at a valuation just shy of $2 billion. In this episode, we get into many of the lessons and insights that he has from growing a $2 billion business. But as you may have also seen, Ben and Employment Hero have been in the news recently for their fight with Hostplus, an industry super fund that is an LP into Airtree, which is one of the largest investors in Employment Hero. That very public fight started when Ben called out Hostplus on a LinkedIn post and quickly escalated to the point where Hostplus pushed for Ben to be sacked as CEO of his company. For the first time since that incident, Ben shares his side of the story on everything that went down on this podcast. But before we get into this interview, just a few quick notes from me. So for those founders that aren't fighting super funds day to day, one of the big challenges that they face when selling to large enterprise customers is how difficult, time-consuming, and expensive it can be to get their ISO 27001 and SOC 2 compliance. These certifications are so important for building credibility and trust with large enterprise customers, but can be such a big distraction and operational drain for early stage companies. Thankfully, there's a tool to help with this. Vanta helps businesses get and stay compliant by automating up to 90% of the workflow for the most in-demand compliance frameworks. And with over 300 integrations, you can easily monitor and secure the tools that your business relies on. There are over 6,000 fast-growing companies that use Vanta to manage their risk and prove security in real time. To watch their 3-minute demo video or to speak to a local team member, head over to vanta.com/playbook. And finally, as Ben shares through this episode, Employment Hero faced some real periods of financial uncertainty, facing insolvency several times through their journey. And he also shared the important role their CFO played in helping them navigate through these difficult times. Having an experienced in-house CFO can be so important to businesses, but are often too expensive for early stage startups. And that's why I'm delighted to partner with Sender. Sender is the OG startup accounting firm in Australia, catering to all stages of your business life. If you're busy running your startup, you don't have the time to do your own books or forecasts, and instead you can fully outsource your finance function, giving you the time and resources back to do what you do best, which is growing your business. They have a dedicated focus on founders, funders, and startups, and have an experienced team that can help from balancing your books to managing your tax to even helping with your exit strategy. I trust and use them with all of my businesses and can't recommend them highly enough. You can find out more or get in touch with Gareth and the team at sender.com. With that out of the way, and without any further ado, here is my interview with Ben Thompson. Hi Ben, welcome to the Startup Playbook podcast, and thanks so much for taking the time to be on the show today.
It's my pleasure. Great to be here, Rohit.
Thank you. Thank you for having us in your beautiful offices, by the way, and specifically in the Elon Musk room, who I hear you're a bit of a fan.
Yeah, a tragic fan.
Love it. Yeah. So Ben, for those people that may be not as familiar with you or your background, do you want to share a little bit about your story and what got you here today?
Yeah, sure. So professionally, I went to university, studied economics and law. Always loved technology as a kid, just intensely curious, and adventure as well. I grew up in a really adventurous family. So once I left uni, I've just been playing with what's possible, and that led me into finance, mergers and acquisitions. Started my career at the Sydney Futures Exchange in derivatives, which was dry, but wasn't there too long. And then eventually got over to the UK for the dot-com boom. I had a great time over there for 3 years doing startups and realized that I could use my law and business background with technology, and that set me on the path to where I am today. Now, in between that, I came back from the UK, started a law firm. It was supposed to be a technology firm, but my father, Rob Thompson, who had spent his entire career in human resources, he did me a great favor early on and said, go and meet all my clients. They're small business owners. Ask them what keeps them awake at night, and they'll probably have some legal work for you, which I did. And what it turned out was that they all had legal work, but it was all employment related legal work. And so my tech law firm became an employment law firm. And I realized after not too long that there was this huge opportunity to help small businesses with employment. They were all struggling. They all were petrified of employing people, and small businesses represent 99% of people or businesses on the planet, roughly 70% of all jobs on the planet, almost 50% of global GDP, all the money that is spent on the planet or turns around on the planet every year. And if that cohort, as big as it is, are petrified of employing people, then the entire global economy has this huge handbrake over it. And it was like a lightning bolt moment. It was like, this is where I want to work. This is what I want to work on. How do I make employers feel proud and confident to employ people? And that's literally the one problem I've been working on for 20 odd years now. And that led to Employment Hero. So there's a few other stories along the way, but we might get back to them.
Yeah, amazing. Obviously, so many parts of your story that I want to dive into, but maybe even just starting even a little bit further back than where you mentioned. I heard on another podcast that you weren't a great student. No. In high school, and it sounds like there was a bit of an inflection point when you finished grade 10, when I think your parents offered to put you into boarding school or to private school.
Yeah, that's true. You've done your research. Yeah, I was living on the northern beaches, living the life of a northern beaches boy, going to the beach, getting up to all sorts of mischief, but really not interested in study. There were certain subjects that I really liked and excelled at, like science, but just generally I wasn't that into school. And so my parents said, look, we're wasting our time sending you to a school it's a private school, but you're not excelling. Have you ever thought about going to a boarding school? And I was like, no, never crossed my mind. And they said, well, we met this guy. Just turned out serendipitously, Dad had spent a little bit of time in hospital beside a younger guy who had gone to a boarding school and spoke about this school with the highest of praises. And Dad said, why don't we go and check it out and just see if you like it or not? So we went and checked it out, and it had a farm, had dams, it had an amazing atmosphere in the country. And within half an hour, I was like tugging on Dad's sleeve going, yeah, this is it. I want to come here. This sounds like the best adventure ever. And It was awesome. And admittedly, once I got there and realized I could be true to myself, true to my parents, that they were investing every cent they had in my education, I felt like I had to commit, and I had to do the best I possibly could. And I came out at the end of that school with what's called a principal's recommendation to do any degree I wanted at the local university. So I chose economics and law because I thought it had the most opportunity.
Yeah. Well, was it that kind of combination of that environment plus probably feeling like responsibility for I guess your parents putting, as you said, everything into providing that sort of education that you think was the catalyst for you to change?
Yeah, there was a lot of responsibility. I felt I owed it to Mum and Dad. Like they were saving every cent that they could to send me to this school, and so I owed it to them to study hard. That, and I was just surrounded by a great group of people. It also opened my eyes up. Like growing up on the northern beaches, which is quite it's the insular peninsula, and within the insular peninsula of Sydney, you've got a small school in Narrabeen, and everyone surfed, everyone did the same thing. All of a sudden you're at a boarding school in the country. People are like literally flying small planes to school and running cattle stations during the school holiday, and they're just this amazing group of really interesting people from really diverse backgrounds. And it just opened my eyes up to the types of people there were in the world and the opportunities that there were.
Yeah. Speaking of that, I also heard another story where your dad introduced you to a bunch of people and businesses that he worked with when you first became a lawyer. Again, do you want to share a little bit about what that opened your eyes to, or what those conversations gave you insight on early on in your career?
Yeah, I mean, this is central. I touched on it just before, but it's central to our purpose as a business to make employment easier and more valuable for everyone. It was those coffee meetings that I had with these small business owners. So I can recall them. There was a guy that owns a chain of service stations, Ben Dunn. There was the Silver and Friends pie shop up at Coleroy. There was just these remarkable people who had their houses on the line to start a small business and run a small business because they were up for the challenge. They were typically really passionate about something, about the business that they were in, whether it's a restaurant or a Subway sandwich shop or something. They really wanted it to work, and they were prepared to take the risk and start the business. But once they got into business, they realized that 80% of their time was consumed by managing employment, recruiting people, hiring people, onboarding people, training people, firing people, paying people accurately in this environment that is the Australian industrial relations system with modern awards and just almost infinite complexity. And then within not very long, they all sat back and went, this isn't why I started my business. I'm spending most of my time doing admin on a thing I don't understand. And if I get it wrong, I'm going to end up in real trouble. Like in this country, and I don't have a problem with it, in this country, if you get employment wrong, your personal reputation is on the line. There's a good chance that, as we saw in today's paper, Din Tai Fung has just been given a $4 million penalty for underpaying people. It's correct. From what I read this morning, those people did that knowingly and intentionally. I've rarely ever seen that in my career, that people intentionally underpay people. What I've seen is a history of people messing up and ending up in a difficult position, but they don't do it intentionally, but it happens frequently. So yeah, these people that I met just explained that to me and said that they spend a lot of time lying awake at night worrying about employing people. And if I could help them in any way, it would be to make that easier. It would be to take away that pain and make employing people easy. And that's literally where our mission came from, to make employment easier and more valuable for everyone.
Yeah, and obviously for Employment Hero, you're coming up to 10 years now for the business. But as you mentioned, you've been working in the employment area, initially with law, for close to 20 years now. Once you've got that insight, what did that look like in terms of actually turning Employment Hero into a business, or coming from a non-traditional technical background to launching a software startup?
Yeah, well, there was there's a lot of learning along the way. So the law firm, just to join the dots, the law firm EI Legal became Employment Innovations. The idea there was that as a lawyer, I could only attend court every day of the week and typically run 2 matters in a day. And so I could only help 10 clients a week. Well, there's 800,000 employers in Australia, thereabouts. So there's no way to help enough people. So then Employment Innovations, the idea there was that we would create the ultimate HR department for a small business. And it would be like a hub and spoke model. And businesses could tap into this central everything unit, HR employment unit. And that worked really well. Like, we scaled that business up around Australia. We opened offices in every capital city. We added all sorts of components to it, payroll, training, all sorts of things. And it was working nicely. It was spitting out a nice profit. And then I always wanted to do tech. Like, I always wanted to get back to it. And then one night I read that article, Why Software Will Eat the World, by Andreessen Horowitz or Mark Andreessen. I can't remember which one wrote it. And it was just such a concrete argument about accessibility of dev tools and the cost of centralized data centers and all the reasons why you could turn a services business into a tech business. And that if you didn't, somebody else would. So I was already motivated, and that was just enough to push me over the edge. And I walked into the office the next morning and saw a guy that we employed at the time, Kirill, whose job it was to photocopy welcome packs for all our clients around Australia and put them into manila folders and boxes and ship them around the country. And I was like, well, that can be digitized. That's onboarding. Let's just do it. Let's just build digital onboarding. And then we've solved a piece of employment. So we started working on that, and then went, hold on, let's just break down the whole employment life cycle into all the different pieces and then just progressively digitized a lot of it. And that's where Dave joined in, Dave Tong, my co-founder. And that's where Employment Hero started.
Yeah. I recently had Luke in here from Safety Culture, and he mentioned he went through a similar journey of going from a more sort of traditional services business to spinning out into a software startup. And obviously they just evolved the business, and that requires a lot of changes from not just internal way that you operate, but also the skill set that you require within the team and how you structure those sort of things. And from my understanding, when you launched Employment Hero, you were running 3 businesses at the same time. I guess, what was the reasoning behind going down that specific pathway or that approach? Or was there any other option? Because I did hear that you felt like you also didn't really have any other option than to run the 3 businesses at the same time.
Yeah, I don't know if I ever really considered any other option. I just ran headlong at everything. I think I'm one of those people that says yes to way too many things. And I found myself with 3 companies, 2 startups and 1 legacy business, which wasn't really that old. So yeah, at the time I had Employment Innovations that I just described was running well, spitting out some cash. Power to Motivate, which was a whole separate product which I licensed out of Canada and brought to Australia and Southeast Asia. It's effectively a reward and recognition business, which became a sales incentive and reward and recognition business, and actually ended up doing fantastically. Became global, and I sold it a couple of years ago, and then that idea around, well, we need to digitize what Employment Innovations is doing, and that became Employment Hero. Those things just happened. They've just made sense. I saw opportunity in each of them and just ran at them.
What did that initial stages of bringing on Dave look like, for example? So again, as I mentioned, you probably needed a different sort of skill set in-house of kind of technical talent and those sort of things. How did you go about surrounding yourself or bringing on board the right people to build Employment Hero at the early stages?
Yeah, I mean, I'm not sure that, well, it's fine now. Now we'll come back to it, but Employment Hero just recently acquired Employment Innovation. So I can talk about like the setup for that was, I grabbed Dave and Demetra from Employment Innovations, and I took them aside and we set up a new legal entity. And I said, okay, we're all employees of Employment Hero. Our job is to put Employment Innovations out of business. I bought 3 copies of The Lean Startup. I bought a copy of Crossing the Chasm, The Innovator's Dilemma. Just went deep into how do you transition from a services business or a legacy business into a new business. And I figured, the best way to do it was effectively to just say, okay, well, we know what we want to replace. We don't want to be human services. We want to be completely digital. So let's try and put Employment Innovations out of business. Now, I don't think I set it to Employment Innovations, but that's exactly what we were trying to do. And it gave us that sort of mental ability to think everything has to be digital, everything has to be lean. And that was the hard part, was that I was still running Employment Innovations. It was the cash cow for Employment Hero. So I was trying to kill the golden goose that was feeding Employment Hero. And I didn't succeed in that, obviously. We've now acquired Employment Innovations, but I did, in the not long after that, I did get myself into a position where we didn't have enough cash. Like, we were looking at insolvency very closely and had to raise capital. The idea in my mind that Employment Innovations, a human services business, could fund a SaaS business, that was a mistake. Like, the SaaS businesses typically require a lot more capital than anyone really thinks. Like, you think it's lots of small clients paying small amounts of money, compounding over a long period of time creates a large annuity revenue business. But the cost of development, R&D, sales and everything, it's a lot more capital than you realize. And that's why startups need VCs, and you've got this ecosystem. You need that capital. But I hadn't done the maths well enough and discovered after a couple of years, this is not looking good. And so we went to Partners for Growth, hybrid debt equity provider, and worked with Jason, who came through in really short time with $3 million. I actually split that between Power to Motivate and Employment Hero, and ran out of capital again, or saw I was going to run out, that we needed more than that. And then that led to our Series A, where Airtree and One Ventures came in and really put money behind Hero and got us off the ground.
Yeah. Do you mind, maybe for founders that are listening to this that aren't as familiar with venture debt, do you mind sharing what that sort of model is and why that was, I guess, the initial starting point for capital for you?
Yeah, I think it's really important to understand as a startup, you've got, what are your sources of capital? You've got yourself, if you've got savings, you use your own money. Then you can approach a bank and obviously put bricks and mortar behind a loan. I didn't want to do that. I really believe that my family, my wife and my kids should be protected, and the small amount of equity we had in our house I wanted to protect. So using the house as collateral wasn't appealing. So then that leaves you with two other options, like venture capital or this other model, which is hybrid debt. Now, what hybrid debt is that organization like Partners for Growth, who I can recommend highly, will lend you money based on your revenue. In our case, we had a group of companies. So we had the revenue from Employment Innovations, Power to Motivate, and Employment Hero. So they lent money to us with the companies as collateral, and you then have to pay back the money. They also get a small amount of equity, so a couple of % in equity in those companies. So Partners for Growth ended up with a stake in Employment Innovations, a stake in Power to Motivate, and a stake in Employment Hero, a couple of %. And then we had to repay the debt that we borrowed from them. Now, it means that you don't have your personal assets at risk. You are borrowing money, you're paying probably 10%, maybe these days more like 12% interest rate, and you do have to give up a tiny bit of equity, but nothing like what you would give to a VC. So it's hybrid debt. It's equity and debt, and it's another form of funding that's available. I would say that you should look at it and consider it. The only downside, a particular downside of venture debt, is that it comes with covenants. With venture capital, it's all on the line. They put the money in. If the company doesn't succeed and they can't get their money back, boo-hoo, like they've lost their money. The investors have. With venture debt, you have your whole company at risk and other companies at risk, and you have these covenants. Top line, your revenue growth has to be at a certain level, and your bottom line needs to be at a certain level. And you've got to monitor those covenants really tightly, because if you cross either of them, top or bottom, that can trigger their rights to sell the businesses out from under you. And that has contributed to my grey hair. That was about 3 or 4 years there where Rob Patterson, the greatest CFO in history, he and I would just he would probably shelter me from half of it. But yeah, we were stressing a lot for a lot of years while managing that.
Yeah. And I think it's really important for founders to understand the pros and cons of all of the sources of capital or just decisions that they make. I guess, given your experience, is there any point in time that hybrid model or kind of venture debt model makes most sense?
Yeah, I think it's well, firstly, I'd just come back to that question. I would say that there is a path which I would encourage everyone to try and figure out. It's not easy, but the ultimate path is bootstrapping. There's some companies that can do it. Atlassian Scott and Mike have nailed it. They just absolutely nailed it. It's extraordinary what they did. The second best example of bootstrapping was KeyPay, which is a company I invested into. I was the only capital into KeyPay, but they were profitable from year one. We raised I invested $360,000, and that was the only capital we ever needed. And because they had worked out that a white label reseller model meant that the cost of a customer acquisition, or CAC, was actually passed on to the resellers, and that the R&D was your only expense and the rest of it was all just gross margin, like super high gross margin business. And very clever team there, incredibly clever team. Small group of 4 technical founders just knew how to build the technical piece, and they let the resellers take care of everything else. And that way, so if you can figure that path out, if you can bootstrap and figure out a reseller model, go for it, or something along those lines, like that's the best case. Coming back to the question, is there a right time for it? Well, if you can't bootstrap, when you're considering and you've got revenue, that's probably the time to go out and say, well, speak to VCs who want to invest and see what the terms that they'll invest on, but also speak to venture debt, because if you've already got a good revenue stream coming in, and maybe you do, I'd had some other companies that you could use as collateral, Well, you don't need to be liquidated. You might be liquidated 2%, 3% rather than 30%, 40, 50% even. So yeah, around about Series A, I would say, is the right time to be thinking about it.
Yeah.
Maybe even pre-Series A if you've got the revenue there.
Yeah. I think it probably just depends on the type of business that you're operating as well. Like you said, some businesses are just more capital intensive and require more, or the industry that they're operating in is highly competitive. And so you need that additional capital to run harder at particular opportunities as well.
And it's important, and it's been hugely beneficial for me in the long term. PFG, Partners for Growth, have done incredibly well out of it. They got stakes in all the companies, and I sold off Power to Motivate, and I sold off EI has been sold, and Employment Heroes raised a lot of capital. They've made more money back on their equity than their debt ever was, which is the model. But I'd also never got heavily diluted at the start. So I'm the largest shareholder still in Employment Hero, and it lets me play hard. It's a really important thing. If you're a founder that's been diluted down into the single digits, I think you play differently than if you're the largest shareholder in the company.
Well, was that a really conscious decision for you, I guess, from the early stages? Because I guess there's a more, well-worn path that founders think that they need to go on, which is like raising capital right out the gate from venture capital funds, usually giving up sort of 20% of the company straight away, even at pre-seed rounds, and that obviously accumulates over time. I guess, was that a really... How strategic was that for you in terms of maintaining that large equity stake for yourself?
It was strategic. I mean, and the fact that I had a business that was a going concern and was profitable gave me flexibility that other startups probably wouldn't have.
Yeah.
So I had that opportunity, and that's rare that you're in that situation, but that was where I was. Beyond that, I'd say there was a lot more time spent looking at death in the face and just like scrambling for whatever was possible, and this is where we landed. At times like that, you do whatever you have to do, and thankfully the cards landed the way they did, and this is how it all played out. Could have played out 100 other ways, but it didn't.
And I mean, more on a personal note as well, because I totally empathize and get you on running multiple things at once, because I do like similar things as well. So I've got the podcast, I've got an investment syndicate, and I was running a startup, but now focusing on other things. But what was that process like in terms of running 3 businesses at the same time? And I guess for the benefit of probably not advice for everyone in terms of this is what people should do, but how did you think about structuring your time or I guess creating your focus, and what were the advantages and disadvantages that came from running multiple businesses at once?
Well, there's a lot to that. So firstly, I think you have to be born for it. You have to be born wanting to be like deep in business. And I don't spend a lot of time following sport. Business is my sport. I love it. I love the whole idea of creating companies and having ideas that you can turn into a business. So when I go on holidays, like for 2 weeks, by the end of the second week, I've usually written a business plan, and I'm like, I have to go back to work or I'm going to start a business. Like it just doesn't, it just comes naturally. So I don't think I have much choice in that. Secondly, so if you're born for it, it's going to happen. Secondly, I think it was really well described to me by another serial entrepreneur, good mate of mine, Sam Prince, who has Sam Prince Group. He's in hospitality and technology. He's a doctor. He's got all these things. He's got about 8 businesses or 9 businesses running. And I, at the time, I think I had 4 or 5 at the time that we were talking. And he said, someone had asked him, like, how do you run so many companies? He said, well, it's not like somebody threw me 9 companies. I started them progressively like I did. And it's like juggling. And, you learn to juggle with one ball in one hand. And then you learn to juggle with a ball in each hand, and you just toss the ball up to the right height. And then you learn to exchange them, and then you can juggle 2 balls, and then you can throw a 3rd ball in there and get good at that. And if you're really good, you can start to juggle 4 or 5 balls. But if somebody just threw 5 balls at you, you would never be able to catch them nor juggle them. So it rarely plays out the way that it appears to people, which is, oh, this person runs 5 companies. No, we started businesses, learned how to run them, progressively added more, and then it makes sense. But you could never do it any other way. Yeah. The third part of the question, like, how does that change me? Well, on one hand, it's allowed me to work on the thing I love working on, which is business. It's my passion, it's my hobby. So I'm lucky to spend a lot of time doing the thing I love most. On the other hand, it's been a massive commitment for my wife, because she has taken on this, the primary responsibility as the mother of our children and runs our house. And I work from home, so I spend a lot of time there, but I don't contribute equally because I'm so busy. And more so with us, we've got a son with special needs as well, so she's had to take on a lot more there. And I think if anything, it's allowed me to do what I love, but probably put a lot more responsibility and pressure on her than she chose. She didn't choose that. I chose business, and she ended up with the other side. So I'm forever thankful for her partnership and her contribution to our success. It is an equal success from both of us.
Yeah. Sounds like a beautiful relationship.
It is.
Again, maybe just digging into that a little bit deeper, because I'm sure that there are founders that are listening to this that in the thick of it, of just really struggling at the early stages of their business. And it is hard. And from my own experience as well, you can be, like you said, you can be born to do this, but for better or worse, your partners are coming along for the journey, whether they like it or not, in some ways. How, again, for the benefit of founders that are listening, how do you juggle that or communicate that to your partner, or how have you guys made it work over the last however long?
Oh, gosh. I mean, again, a bit like the juggling analogy. I was an employee when we first got together. We met behind the bar. Like, we both worked in the same pub while we were both at university. So we've known each other since we were young 20s. We've known each other well before we discovered success, money, anything else. So it's just a shared journey. We both, I guess I was going to say we both love adventure, but I think I've dragged Kaz, my wife, into a few adventures that she may not have chosen otherwise. I don't know. I feel like we're just on a journey together, and it's just the way it's rolled out. It hasn't been like there were many big turning points where we needed to make a decision. Like, I made an investment. I remember I've always included Kaz in investments. Hey, I'm thinking of putting money into this. If it could go wrong, we could lose it. Or the day that we were driving to work together, when I mentioned that we looked insolvency in the face, it was another one of those times. And I'm like, I don't know if I can make payroll this week. And she's like, what? I was like, no. So she's always been there at the coalface, like dealing with it like I did. I remember that night I was like, and talk about a team, she came through there. We had lost, sorry, it's a side story. At that moment, we were running out of capital. It was while we were transitioning between business models in employment innovations. We'd been told by the landlord of our current office we had to be out by the end of the month because there was a big redevelopment. We're looking for a new office, couldn't find anything, and the end of the month was like a week away. And so not only were we potentially going broke, but we don't even have an office. And I'd committed to take my son out to the AFL on a Friday night, and I remember coming home and she's like, I found an office in North Sydney and I've been in touch with the agent, and she got it all locked away. Wow. It's just a team effort. Yeah, she's as much a part of the business as anyone else.
Yeah. And as you've alluded to, a big part of that process is just rolling with the punches that kind of come with business. COVID was a exceptionally difficult time period for a lot of businesses, but to my understanding, you used that, or during that period, you expanded out to several countries during that time.
Yeah.
Was that the first time that you'd expanded outside of Australia, or were you already in that process prior to COVID?
Employment Hero hadn't expanded internationally. We had the intention of it. It was always in our Series A deck that we would expand it to cover all of the Commonwealth countries that had shared English common law sort of principles around employment. We just saw this sort of pattern of standard employment practices that we could service. So we always said we'd do the Commonwealth countries and we'd go global. Power to Motivate, and one of my other businesses, had gone international. We, at that stage, pre-COVID, were operating in the UK, Southeast Asia, New Zealand. So I'd experienced that. But yeah, during COVID, the first month maybe, we didn't know whether we were, I think I've said this on other podcasts, but I remember it's such a sad thing. I was sitting there watching video footage of the Japanese tsunami and looking at these waves and watching where people thought they were on the high ground and then realizing actually like we're below the high ground, like the top of that mountain, maybe the top of, but even then you'd see a hill go under and you're like, where is the high water mark? No one knew at that time, like how bad was COVID? And so I just said to the company, we don't know whether we're on high ground or whether we're going to get written off. But either way, no matter how much time we have, we've got to spend it helping people. Everyone's dealing with this. Everyone's in the same boat. Let's take our platform and just use it for good. Figure out every possible feature that we could build to make it easier to survive in this situation. And the whole team just rallied around that idea. And we started releasing new features to claim the government funding for employees. I can't remember the name of the initiative now. We built like ways to claim that, ways to report on that, ways to engage your team remotely, like just adding all sorts of features and shout outs, all sorts of things to do. And it just one day at a time got better and better and better. And all of a sudden it was like, oh, actually, we're going to hit our targets. We're going to exceed our targets. We're going to go faster than we thought. And then we got hit with the next question was, well, it doesn't look like we're going to be able to get on a plane for at least 18 months. So that means no one else is going to get on a plane, which means no one else is going to go expanding internationally. So why don't we do what no one else will, and let's open in 4 markets as quickly as we possibly can without ever getting on a plane. And so Dave and I and the leadership team just went, oh, how would we do that? We'll just recruit remotely. We'll set up teams in all these different countries. We'll build the product out. And we just had this idea and went and did it. And we launched into the UK, Singapore, Malaysia, and New Zealand during COVID without ever stepping foot on a plane, and started signing clients up and started realizing that the product market fit we thought we had, we didn't really have. And by the time we got out of COVID and we could actually start flying again, we'd learned our lessons. We were achieving product market fit in all those different regions, and we were probably a year or two ahead of our competitors, or some of our competitors at least, because we'd just done the stupid thing of let's try and internationalize without getting on a plane.
Yeah. Having gone through that experience, and I've also heard you mention that it wasn't I think it was about 2 years later when you first stepped foot in Singapore, for example, and there was just night and day in terms of what you were able to understand in terms of each of the markets. I guess with hindsight, and again, for the benefit of founders that are listening that are potentially at that point where they're thinking about expanding internationally, do you have any advice on what's the right process approach that they should do in trying to ensure the best chance of success?
Yeah, I think you have to send one of your best and most senior people, preferably a co-founder, into the country that you're planning on launching in, so that they can live, eat and breathe the conditions of that market and build product market fit in the best possible way. So we actually had, when I reflect on it, we actually had seen KeyPay expand internationally into the UK and New Zealand prior to COVID, and Phil Burney, who is an absolute freaking legend, moved to the UK to build payroll for the UK and spent 3 years there at least. And so they had proven like product, they knew how to get PMF and product market fit and really build out. And I think that is the right approach. Find a founder who's prepared to move and get their feet on the ground.
Yeah. And it's interesting that you mentioned find product market fit in each of those markets. Do you mind, what does that process look like? And clearly you've got product market fit and market leadership in your country. What does that look like when you're trying to do that in 4 other countries at once? Yeah.
So part of Employment Heroes, what we call the EH way, is that we think from first principles. And so on one hand, employment is very common almost everywhere on the planet. It's a contract between 2 parties. You give your time and effort and you get paid money. So, and you get to do that, you have to have an HR file, you have to have a payroll system, you have to be able to record the condition, the data that's necessary for you to get paid. So there's some really basic first principles of employment that are common everywhere. But then when you get in market, you realize that in our case, we'd grown up in Australia where every single person in the country gets 4 weeks of annual leave. If you don't use it, it accrues, and that's standard. In the UK, every company has a different way of issuing and managing leave. Some companies will give 4 weeks on a use it or lose it basis. Some will give you 6 weeks and you can accrue 2. Like, there's just different ways, different classifications of work, all these different ways of dealing with leave management. That's just one example of one area of one part of our product that needed to be customized to those local conditions. And then you realize that's different in Singapore, that's different in Malaysia, that's different in New Zealand. The way pensions and superannuation is managed and how you sign up and how you contribute is different in every country, and the way that naming conventions are dealt with in every country is different. So, and people, they won't be familiar with your product, the uncanny valley in artificial intelligence where you see a human-like face, but it's just a little bit out and you know it's not real. I think there's a sort of uncanny valley in UX and digital platforms as well. And a local can see that there's just something not right. This just isn't local enough. And that's what I mean by PMF. You've got to overcome the uncanny valley in your product so that locals will use it thinking it's local.
Yeah. And what does that look like in terms of kind of balance and prioritizing, let's say, like product features or updates to UX across those things, when I guess you're used to just doing that for one particular market and then suddenly you're doing that for 5? And then I'm sure you're getting conflicting requests or requests for updates or product features or all of those sort of things. How do you juggle and balance that of roadmap versus, I guess, those requests from individual markets that you're trying to expand out into?
Yeah, that is a fantastic question. I wish I had a fantastic answer. It's the way we've done it, and I don't know if this works for everyone, but the way that we've approached this from day one is that we've always had a master plan. When Dave started, we stood at a whiteboard and I scoped out, because I was an employment lawyer, I understood first principles of employment, and because I'd run employment innovations as an HR services business, I understood every aspect of the employment life cycle: payroll, HR, rostering, time and attendance, employment law, like every piece of it. And I just stood at the whiteboard and wrote effectively a master plan for what Employment Hero should be. And we still use it. Dave's got it and he brings it up. Oh, that's what we're talking about. Ben put that on the board 10 years ago. And so we had that one master plan. Then I wrote Master Plan 1, which was a strategy for getting us scale. And then Master Plan 2, which was how we got through COVID. And then we're now working on Master Plan 3, which is a whole different thing about recruitment and swag and smart match and stuff we could talk about. We're running out of time. So the company has this master plan, which is dictating what we're trying to do as a company strategically, and we're putting a lot of big bets on that master plan. Then Dave, who's CTPO as head of product, he's getting all the feedback from customers and building and looking at competitors and like, where do we have feature gaps? And so then he's prioritizing product market fit, and he's using win-loss rates to drive like his development. Like, where did we lose a deal? Why did we lose a deal? How could we win that deal? So he's working really closely with sales to drive the roadmap. And then we're working closely with CX and support and listening to where customers are complaining about features. And then that's why I say it's a hard answer, because you've got like all those different inputs and you're trying to figure out like, how hard do we want to go on the big strategic master plan? How hard do we want to go on beating the competition? And how hard do we want to go on just giving customers what they're asking for, which often isn't the thing that they need, but it's what they think they need. And that's, yeah, it's just a perennial problem, but that's the life of a technology startup CEO.
Yeah, absolutely. And you mentioned like the different sort of master plans that you've had to evolve over time. Just looking at some of the stats for Employment Heroes, you've got over 2 million users, 300,000 SMEs around the world that are using the product, $650 million in funding in total, and close to a $2 billion valuation. First of all, congrats. Like, that's an incredible journey and milestones that you've been able to achieve to date. But I guess, how has your role as the founder and CEO evolved over time, and how have you had to learn and grow with the opportunity as the company has grown over that period?
Yeah, I think the key thing, there's been certain stages where there's been like really important hires. So my job is to make sure that I'm hiring the right people at the right times. Dave, as co-founder, is obviously the most important. Couldn't have done any of it without him. There's a whole bunch of people I could call out, but our CFO, Rob Patterson, has just had he actually started after we'd started Employment Hero, but before our Series A. So he's been there through every round. He understood the P2M, like the power to motivate, the employment innovations and the Employment Hero sort of financials. And so he helped get us all through that. There's no way I'm not good with spreadsheets. He's done an incredible job there. Then Kev Rawlings, our CRO, came in just at the right time. I was like trying to run marketing and sales, and he's a chemist by training and has brought this scientific approach to like how to build the engine that drives sales. I couldn't have done that, but he came, like, without him, we wouldn't have grown our go-to-market engine the way we have. And then there's dozens of other people that have. So my job is like taking my skills as far as I can take them, and then finding the next person that can level up from where I got to, and knowing when it's time to like hand over because I've tapped out.
Yeah.
But beyond that, I mean, I'm still just an entrepreneur. I'm just good at sniffing out opportunity, seeing patterns, and then saying to the company, hey, like, I see this, like, I know it's going to work. Just follow me. It may look crazy, but it's probably going to work. And there's that's my role, is hiring the right people, and then pattern matching and basically saying, let's go after this. I think it's going to work, and keeping them confident.
Yeah, I think that I'd love to maybe dive in a little bit deeper into hiring the right people, and also that point of being able to step back and hand over the reins to someone. How do you know when it's the right time, and how do you know it's the right person? Is there particular processes that you go through, or do you identify people well ahead of time and kind of work with them to get them on board, or what does that look like?
A little bit of both. I think you're always hiring, you're always meeting people. Like a good example of that is when we raised our Series A at the time, AMP Capital, they had a corporate venture capital investment unit. They invested in our Series A and sold it off after the Royal Commission. They would have made a fortune, probably would have been their best asset. But I met a guy, Rob Dunn, who later went to Vault Bank and he's been around in fintech. And I had these ideas of what we could do, the whole other discussion around like where payroll and payments intersect, and that we could do some really cool things for consumers. And so I was like, hey, Rob, I want you to come and help build this. And so that was one of those longer term relationships. So he came over, which has been brilliant. And then like generally like people, when I'm just interviewing someone I've never met before, I just follow the Who methodology, the Jeff Smart. I don't know if you've read any of his books. So Top Grading is the original book. It's a tome. It's 600 pages long, but it's just an interviewing technique and a top grading technique. But effectively, I spend a couple of hours when I meet somebody, and I start by talking to them about their childhood, where they grew up, who their siblings were they competitive with their siblings, in what ways, what were their favourite subjects at school, who was their favourite teacher. But you don't even need to get to university. By the time you've got through primary school and understood like their psychology, so if this person has the aptitude, the attitude for the job. And the hard part is sometimes you figure out it's definitely not right. And it's like, how do you politely end that conversation without destroying that person's ego? But yeah, it's just a process that you can learn from reading either the Top Grading technique or Who, which is the shorter version of the same technique. It's a highly recommended book, and put it into practice.
Are there core values that really stick out to you, or particular things that you look for in that sort of early childhood story or personality that really hooks you onto this might be the right person?
Not necessarily, because different roles require different behaviours, and somebody who is highly analytical is going to be very different to somebody who's highly competitive, who you want to be running sales, is different to an engineer who like really just is super smart. So no, I think I don't have like a set of values or anything. You just know when I know.
Yeah.
Yeah.
And obviously, I would be remiss to leave out that you were in the news recently a fair bit around Hostplus, which is one of the investors in Airtree, which is an investor into Employment Hero. Again, for the benefit of listeners that maybe aren't as familiar with the story or live overseas and aren't quite sure what was going on, do you mind sharing in your own words what from your perspective, the issue was? And
Yeah, it's become a much bigger news story than it deserves to be. The principle is important. The story became a drama that is almost irrelevant to the actual principle. But the background is that another player in this industry has an onboarding solution, and when you onboard people into a new job in Australia, they have to be offered a choice of super fund. This company had its own super fund, and they were channeling a lot of members into their super funds. Perfectly legal. But It's almost an unfair advantage when you can onboard people and then offer them the fund. It's called self-dealing. And again, it's not illegal. It's stopped though. So they were called out for doing that, and they shut down that fund or divested that fund. And so that all stopped. But then the concern by the large industry funds got away, and the government or the Minister for Finance and Treasury asked, what do people think about banning advertising of superannuation during onboarding through a digital platform, which includes us? And Hostplus took a really strong position in response to that, which was advertising should be banned not just during onboarding, but at all stages of employment. And beyond that, employees shouldn't be told that they can choose a new fund. They should only be told that they can choose an existing fund, or they can choose the employer's default fund. And to me, that was entirely self-serving, because Hostplus has a huge segment of new employees who join the workforce in hospitality and retail, and they select Hostplus as their first fund. Well, if that's the case, it makes sense for them to block them choosing any other fund through their career, because they're going to lose members. And so I just looked at their response and said, that's completely inappropriate. Not because it was just self-serving for them, but because it was ignoring what I think is the real principle here, is that the world is digitizing incredibly quickly, and that platforms like ours are a digital channel to engage people with their superannuation, with their work. Some of the things that we can do are changing people's relationship with time, so that time is money. They can go out and find more shifts, so they can earn more money, they can get paid in real time, they can engage with their super at important life stages, like when you're having a child or moving address. And they're just like saying we should just shut that whole thing down. Digital is bad, send everybody to the ATO. Well, they're not going to go to the ATO because it's a terrible experience. And what will happen then is they don't make a choice and they end up in their employer default fund. So meanwhile, Hostplus spent $30 million a year on advertising, particularly at sports events and stadiums and sports teams. And I said, look, just try our platform. Just test. As a technologist, you're always running A/B tests. Run an A/B test. I'll give you $1 million worth of free advertising on our platform. I'm 100% sure it'll work. It'll be better for your members because it's a lower cost of advertising, which means you're spending less money on marketing, which means more money goes back to members. But then that challenge publicly, which I did on LinkedIn, was met with a letter from Hostplus to Airtree, who they had invested through into us. They got like a sub 1% equity holding. But they didn't just ignore the challenge. They actually asked Hostplus to fire me because I challenged them. And then that just made me say, well, that is like really overstepping the mark. You're not embracing digital. You're not seeing the opportunities here for your members, and you're trying to get me fired for calling out and challenging you. And that's where it became a big news story. Now, the principle here is that digital channels are hugely valuable. They should not be banned. And if the people proposing to ban them are self-serving, that we should be calling that out. For us, it's a couple of % of our revenue. It's nothing major. But the principle of banning choice, banning digital, really got under my skin, and I wanted to say something about it, and it blew up.
Yeah. And as you said, it blew up and seemed to be all over everything that everyone would talk about LinkedIn for a couple of days or a couple of weeks. What did that process look like for you yourself? Because obviously it sounds like there's a very strongly held principle that you have in terms of the importance of this, but it is challenging when you have an LP inside a large investor in you wanting to fire you. What did that from a personal level feel like for you, and how did you manage that process?
I didn't lose any sleep. I didn't get upset. It actually made me double down, like red rag to a bull. I don't know if you saw. I just did the maths around like how can an industry super fund that manages $1 billion, $100 billion, a mega fund, throw their weight around like that? And then you look at all of the industry funds and the total like pool of capital, which is Australia's combined wealth. It's our combined savings entrusted to these people. I think that's incumbent on them to behave well, and if they're going to manage our savings, not force people to be fired because they're challenging their use of marketing and digital platforms. And so if anything, like once that kicked off, I was like, I'm just doubling down. And who knows where this goes, right? There's a chance that the government, and this is how it all started. There's a chance the government will try and legislate to ban advertising on platforms like ours through the budget, the federal budget in May, and that the legislation will slide through with the budget papers, and it's just all happened. That's why I made it a big issue, because it needed to be controversial so that people could pay attention to it. And I really hope, even if the government supports banning of advertising, I hope that it goes through the proper process in Parliament, that there's a committee review, there's opportunity to speak to the benefits of digital platforms and what we can do to help people, and that it doesn't just get passed with no proper oversight. But that may not happen. So it's not gone away yet. I'm watching this like a hawk, and if it starts to go down that path, I'm going to make a lot of noise, and there's a lot of other people will too.
Yeah. What would you ideally like to happen from here on in?
I just don't think it should be banned. We've developed a code of practice for the industry which bans self-dealing, which is the original issue. Make sure that any advertising is clearly recognised as advertising, disclosure of all fees. Ultimately, so I think we should adopt that and recognise that the industry is playing properly. But ultimately, where I think we should get to is just think about how can a platform, whether it's us or anyone else, how can we help the average Aussie really understand their savings and engage with their savings in better ways. And we've got artificial intelligence, we've got digital interactions, we've got new user interfaces like verbal and video interfaces. Like there's to me that we're sitting on the cusp of infinite opportunity to use digital to engage members. The last thing we should be doing is banning that channel. Let's just lean into all of this opportunity to help people. So don't ban it.
Yeah. And like you said, if people want to support or kind of get behind what you're doing, what's the best way for them to do that?
We haven't really put anything together, to be honest. If it looks like this is going to be, if this is slid through, then I'll start something. If it goes to Parliament, if it's recommended, I'll create something as well. I don't know. I don't have anything today, but just follow me on LinkedIn and Twitter, and I'll keep people updated.
Perfect. We'll make sure we add in all of those links into the show notes. And maybe just to draw out the lesson from that, because I guess it's funny, even at the earlier stages, you see a bunch of founders that are building companies for their investors more than core for their members, if you know what I mean by that.
Yeah.
So just even thinking about the business model, what they pitch, trying to integrate AI, even though it may not necessarily make sense for their company because they think that they're much more likely to get funding. I think it's interesting that you almost have an opposite end of the approach of that, which is just being very principled around what is core value to your users, and obviously important for the industry, but also for your business as well. Is there anything that's, obviously it sounds like it's part of your personality, but is there anything kind of like enables you to feel more comfortable doing that, or kind of things?
Absolutely. And that's why it's why I get out of bed every morning. Employment, as dry and as boring as that word may be to many, many people, employment is one of the most important things on this planet. There's love, and then I think there's employment. Without employment, there's no opportunity. Our job is to find ways to make employment work better, to make it easier for small businesses to employ people, and to make every dollar that every employee earns go further. Like we've got $120 billion worth of salaries flowing through our platform. We want to leverage that to the advantage of everybody on our platform so that their dollars go further. Like when you know that you're fighting for the benefit of small business owners who have got their houses mortgaged to run a business and provide employment opportunities, and you're fighting for the benefit of their employees so that they can send their families to schools like I went to, or university for the first person in their family. Far out. Like that's a great reason to be in business, and it is empowering. Like that's what gets me going. It's the only reason Employment Hero exists is for that purpose.
Love that. Ben, I can talk to you for hours, but mindful of the time. So maybe just to finish off, obviously it's been an incredible 10-year journey so far and you've achieved so much already, but definitely sounds like you're just getting started with all the impact that you want to make. What's next for Employment Hero?
Oh, there's so much. So one little project, well, it will eventually quickly become a massive project, is Hero Foundation. So that's a personal project I'm driving. I'm looking for a CEO. If anyone who is product led and quite technical wants to join in and become the managing director of Hero Foundation, I'd love you to get in touch. Basically, Hero Foundation is going to give away the Employment Hero platform when we can connect a charity that is helping people find work and employers who are looking for people who come from disadvantaged backgrounds. The platform on which that happens, Employment Hero, will be provided free, and we're just looking to find as many charities and as many employers that we can connect. And we see the opportunity to do that on a global basis. There's 3.2 billion people that don't have internet yet, but with Starlink and satellite internet, those people are coming online. So we want to connect people in Australia who are living in regional and remote areas, working parents, people, single mothers who are looking to re-enter the workforce. There's just so much opportunity. But then we're just going to keep on going. So Hero Foundation is going to be massive. The other one that's really exciting is we've got a whole new approach to recruitment called Smart Match. So the way that recruitment works today using a job board is that only 1 out of 5 jobs is ever advertised. Most of them are filled through word of mouth. Like, people avoid paying for a job board. And if you do pay for a job board, you're paying up front what we call pay and pray, that you find the right candidate. What we're doing with Smart Match is completely changing the model. So you can create a job seeker profile using Swag, our employment super app, and then we're matching your experience, your profile, with all the jobs on our platform. So we've got 2 million roles on our platform. And so you're actually, for every role on our platform, there's a talent pool waiting to start working for that company and in that individual role. And so rather than advertise for a candidate, you've actually got the candidates there. So it bypasses 90% of the recruitment process and just brings the people to the front door. So Smart Match is just in its infancy, but it's hugely exciting. We're launching that globally, automating payroll completely with AutoPay, which will be a fully automated payroll solution, which we're rolling out in Q3. We've got another product coming, which I won't go too far into. I'll just say it's called Employment Unlimited, which will be rolling out shortly. And then there's all the fintechy stuff, like with Swag, we want people to be paid in real time. It's bizarre that people paid a month in arrears and don't get any interest on their earnings. We can change that. There's just so much stuff going on. It's really exciting.
Love it. Watch this space.
Yeah.
Amazing. Ben, thank you so much for coming on the show. It's been an absolute pleasure.
Yeah, likewise. It's been a real pleasure talking to you. Thank you.
Cheers. Thanks.
Cheers.
Thanks for listening to episode 179 of the Startup Playbook podcast. As always, full show notes from this interview will be available at startupplaybook.co. I'll be back next week with another episode, but in the meantime, if you enjoyed this interview, please don't forget to like, share, and subscribe. As always, thank you for tuning in, and I'll see you next week.